When the numbers make sense, it doesn't really matter what part of the market cycle we're in.
iShares' newest approved sponsor, Chris Robison.
I would say the past year, 2023, has been a different change in the economics that we've seen.
Not only the CEO, but also the fund manager with Empower Investing.
Before, it was a lot easier to find deals. We could find deals that made sense. We could buy things that were 10 cap or 8 cap and find some ways to value add. But a lot of those deals just changed, and especially with the interest rates going up, then it seemed like it was much more difficult to find things that would working. Our underwriting changed. So the current economic times, everyone has this, sometimes they want to put a narrative on things, and I say,
Hi there, welcome to the iShares sponsored Fundication Show. I'm Julie Tallman, and I'm with host Christian Sadler.
Hey everybody.
And today we have the joy of presenting you iShares' newest approved sponsor. Chris Robison is not only the CEO, but also the fund manager with Empower Investing. And we'd like to welcome you and say thanks for coming into the studio today.
Awesome, thank you for having me.
Absolutely.
Now, Chris, the one thing we would like to do before we get started into content is we have this plaque for you here. And so this just commemorates you and getting fully approved with iShares. And so now you get to offer many of the benefits that iShares offers, and we can help you in raising more capital for deals that you're doing.
Fantastic.
Congratulations.
Thank you.
So Chris, I would love to get the backstory on Empower Investments and how this all came about.
Yeah, what's your experience? How'd you get started?
Yeah, so I started in real estate and in investing about 2009 was when I really started getting into it. I got my mortgage or loan originator license in 2008 and started working with investors buying properties at the foreclosure auction. And I worked with a hard money lender there and helped him do some pre-qualification for people for takeout refinances. And I got more interested in what he was doing there and had other investors that were interested in being the lender instead of being the buyer at the foreclosure auction. And so then I started putting those people together, buyers and lenders at foreclosure auctions. And I had a fantastic investor, and she would give me $300,000 or $600,000 or more in cashier's checks made out to my name, and said, go make some loans at auction. And so that's what I would do.
You literally did this on like the
courthouse steps. Yep. Yep. So Tuesdays we would have I partnered with a couple of real estate agents in the area, and they would teach a class that was how to buy a foreclosure at auction. And then Thursdays we would have another meeting in the evening, and we'd go through the properties that were going to auction the next day and identify which ones looked like they would be good buys. And then I'd be down there Friday morning at the courthouse auction, waiting to see what would happen. And so we'd make some loans there, yeah.
So that obviously is a starting place for you. How did you go from single family homes and foreclosures and transition that into multifamily and everything else that you're doing now?
Yeah, so I think it evolved over time. I always have wanted to push myself to figure out what else can I do and try to grow and do bigger and better things, and then educate myself constantly, and then put into action the things that I learned. And is one of the best ways of learning is actually doing it. So then it turned into where I had lots of investors that I was working with. And then eventually I created a pooled investment fund. We're focused on hard money lending, and then acquiring some of my own properties on the side and getting experience on hands-on operations, and realizing there's a lot to all of it. and juggling all of that. And then started working with different operators that were good in their fields, and partnering with them on the money side and banking side of things that they weren't as strong in. And really, it's been creating these powerful relationships between operators and then the money side, and bringing that together. And that's what Empower Investing is evolved into today.
So it kind of seems like you had it in with the money from the very beginning, and maybe this is where the name Empower comes from, because you were empowering people to buy right there on the courthouse steps. I mean, obviously, if they were getting a loan from you right there, they didn't have the money figured out. And has that been your primary position, is aligning investors with the money?
Yeah, I would say both sides. Investors who have money, they're also looking for ways to put their money to work. And how do they do it? How do they do it in a safe way where they have collateral and they don't just have some deal? I've seen plenty of deals that are written up between people or not written up, that aren't documented properly. So helping them, hey, let's record a deed of trust and make sure you've got the proper title searches and items done that are necessary. And so, yes, working with the investor side and showing them different ways they can put their money to work when they can earn a very good, predictable return on their money secured by real estate. And then also empowering the other investors that want to flip houses or other projects like that.
So I've heard about the Empower investing philosophy. Does that cover that, or can you go into that a little bit more?
Yeah, so the Empower investing philosophy is that we are really empowering, focusing more towards our investor base, empowering the investors to put their money to work and having different options than just a stock market or a 401k that's more of a blind investment. So with Empower investing, they can have their money invested in real estate and secured by real estate and have more predictable returns that may be less volatile than a stock market or other type of investment options like that.
Perfect. And that's why iShare, the Fundication Show, and your business are doing business together. Tell us a little bit about your team and some of the success stories that you guys have been able to have.
Yeah, so I've got a great team with me on the back end side. So we've got a couple of people that's in our investor services side of things, making sure that all of the accounting and details are compliant and staying up to date and current. We've got some great operators that we work with. So one of the operators is my little brother. He's in the self-storage business, and so we partnered with self-storage properties about 6 years ago. And he's grown that brand really, really well over the years and operated really well. Then we've got another partner that's a young couple that was fixing and flipping houses years ago. And I told them, hey, you should start buying some of these and holding them. That's going to be a much better way for you long-term results, which you'll get than just a paycheck. And he didn't listen to me at first. And then after a couple of years, he said, all right, what is this rental thing? Tell me how to do this. And coached him along the way with my real estate finance background. I knew how to guide that path there. And him and his wife are good partners together. He is a contractor and knows the construction side of things, and she had a background in property management. And I said, with you guys' backgrounds, this is the most smart thing you can do with your time and energy. Buying properties and holding them and doing it for yourself instead of working for somebody else.
Well, they're so lucky to have somebody like you to interject. I still call myself a recovering flipper because so many years I continued in that flipping role of always turning over and taking my equity by selling. And I think everybody who gets into flipping real estate in one form or another, and flipping doesn't always necessarily mean you're buying something, fixing it up and turning around, selling it immediately afterwards. But if you're selling it within about a 3-year time frame, I kind of look at that as like a flip, right?
Yeah.
And we all look back and say the biggest regret is the ones that we sold, right? We never regret the properties that we held. It's the ones that we sold.
Yeah. You got to build wealth, and long-term wealth and is appreciation and holding properties and cash flow. So for that example with that couple, they were able to buy properties and generate positive cash flow and quit their 9-to-5 jobs and focus mostly on that. And so that's been really wonderful for them in their life.
And have you kept your mortgage banking license as well, or have you just taken that and transitioned it more into what would be acting like the bank with your investors?
Yeah, in 2014, usually at the end of the year, I would look back at my numbers and say, what happened, and try to tell the story behind of what the data is telling me. And so I saw that I had really good months in my hard money side, and I had really good months in my mortgage side, and they were opposite of each other. And so I made the decision to sell the mortgage company. And so I sold it to my processor that I had worked with for like 7 years or something. And that was a really good thing for both of us. She had a great business, her income went up a lot, and I still had a great service that I could send people off to get mortgage loans on them. But then I focused primarily on hard money lending from there, and then property acquisitions and myself.
Do you feel like your business grew because you were just more laser focused?
Absolutely. As soon as it was, I was like, oh, I was doing more, she was doing more. Both of our businesses grew, and yeah, it was a good thing, financially there.
Tell us a little bit about how Empower Investing has made it, some of the shifts and change you've had to make in this different economical environment.
I would say the past year, probably 2023, has been a different kind of change in the economics that we've seen. Our underwriting changed. I think that's probably the biggest thing. Before, it was a lot easier to find deals. We could find deals that made sense. We could buy things that were a 10 cap or 8 cap, and find some ways to value add and really push it there. But a lot of those deals just changed, and especially with the interest rates going up, then it seemed like it was much more difficult to find things that would working. So we lowered our underwriting, said we're not going to shoot for maybe a 90% occupancy in a storage. Now we're going to look for an 80% as far as underwriting. Does it cash flow at that point? So we became a lot more conservative with it. And then the other strategy we've implemented is creative financing. So for example, we closed a deal last year and we did a seller finance. So the seller was really sticky on their price and the market had given him lowball offers. And so we said, all right, we'll give you your price, but give us some terms. And so we came up with terms that made sense to him and made sense to us, and closed on a deal with him.
And I'm guessing that your financial background helped you kind of back into that, where it made up for maybe the extra that you were paying. We had the pleasure of meeting your parents outside. Do you feel like your dad's accounting background rubbed off on you a little bit in the way that you run numbers?
Possibly so. You know, the numbers has always been my favorite part of the business. I always liked math in school, and love to see what story they're telling us. But yeah, so real estate really is a mathematical problem in the background, right? Getting a lot of those pieces right, and then the operation of it, making sure you can operate to hit your mathematics that you think that you're going to.
Yeah, they say math doesn't lie, but people do, right?
Right.
So as far as that is concerned, you had mentioned that in 2014 is when you looked and analyzed your businesses and you sold the mortgage company. How often do you do those check-ins and look at the math of your overall business? And maybe what are some tips that other people can take into an account if they're growing a large portfolio? What are some of the metrics that they should be watching very closely, and how often should they let that math change their decisions?
So I guess I do a granular look, and we do more of a zoomed out look at different times. So my zoomed out look, I'll spend more time with that usually at the end of every year and see, what's going good, what's not going the way that I want it to, and then reevaluate. But from the more granular side, in the past, we had profit and losses where we looked at them maybe once a quarter, and sometimes those would be delayed by 45 days or something. So I felt like the data was really too far delayed for what I wanted to see. So now our goal is always to have our P&Ls done within the first 5 days of the month for the previous month. And so then we can look at the data and see what's going on. Are we hitting our numbers or are we not? And then it's also helpful for investor distributions. Investors like to have their payments, and they like to have them consistently and frequently.
A lot of sponsors, that's their toughest thing, is getting those reports, getting out the numbers, getting the distributions in time. And that's one of the things we really look for in a pre-approved sponsor, in a pre-iShare approved sponsor, is how often and how accurate and how timely are the reports and the information. What about your team do you think allows you to continue to do that so well?
Well, I think it's priorities. Number one, like it's just our top priority that has to go out there. It's so interesting when you look at an investor's experience in a deal. Oftentimes, it's not necessarily the actual mechanics of the deal. It's really how the interaction is going with us as a sponsor. So if our communication with them is good and our reports are timely, then even if we're having a hiccup in a project or it's not going the way we want it to, those are overlooked much more by saying, okay, at least we're having good communication with somebody, versus an operator that has maybe very good, his deal's going great, they make a lot of money, but if investors aren't communicated with, they're very frustrated and they don't want to deal business again. And so primarily, all my investors, I look at them as very long-term relationships, and I want to work with these people for decades. And so it's consistent performance and the financial side and those reporting pieces, because that's such a big metric for them and how they view their investment.
Can you share how you do your reporting and how you get that out to all your different investors?
Yeah, so there's a couple of different strategies we've done over the years. Some of it's been very casual, like it's been a text message that goes out and saying, here's a disbursements coming your way. I usually will tell them what day to expect it in their bank account, so they're not guessing or wondering when it's going to hit there. And then and a brief explanation of what's going on with the property, especially if projections a little bit or the distribution's different than what we anticipate it to be. I feel like a story behind it is helpful and warranted and fair, to let people know what's going on. And then most recently here, we have an investor portal platform where investors can log in and get real-time data and access to the reports and what's going on. And so that's been a huge benefit that our investors are loving, to be able to have access to that and tap in. Yeah.
When I talk to investors, they often, when we ask, I talk to a lot of people in regards to our listing hub. And when I talk to investors, often if they have several investments and they're trying to figure out which one to list, oftentimes they do want to hold on to the one where they have open communication with the sponsor. It's like, and then you might hear them say like, well, that one's not doing as well, but I feel like I can really talk to them at any time. So you're so right. It's like no news is better than, or bad news is better than no news. And if you have good news,
give the news, let them know what's going on. They want to feel like they're part of it. And that's the thing that's been really interesting. Some of the investors that I work with, they are like you, a retired or recovering flipper, however you phrased it earlier in there, but they still want to be part of the action. They still want to be part of the deal. They're excited to hear the updates and what's going on, and even the struggles, like, okay. And then, oftentimes we have investors that they have experience in different things. And so they'll pipe in, they'll give advice. Hey, have you thought of this? Have you considered that? And, using them, for more than just their money, but also their experience and brain power has been wonderful.
So Chris, talk to us about the progression of Empower investments. I mean, when did you make those transitions, and where is it that you started getting into bigger and bigger deals?
Okay, so I started doing a lending fund. That was 2017. And then I had another friend contact that I knew, and he was starting a fund as well in 2019, 2020, something like that, and wanted to help get his money put to work. And so that's how the relationship initially started. And so he had a lot of experience in origination of hard money loans, and I did. And so I helped put his money to work, and they raised about $65 million in that fund. And so I became a partner with them and put the money to work and oversaw operations and servicing and helped build out that whole team because we didn't really have anybody with it. And so we built the whole sales team and loan origination side, processors, and then the servicing side and accounting. What happens when you have loans that don't pay like you want them to pay, and all of that. So that was a big growth point there. That was a lot of fun to work in that group for a few years. Part of the goal was to buy properties, like bigger, larger properties was one of our targets in that fund group. And so we had different ideas on what that looked like. And so I wanted to go bigger with bigger properties, multifamily, and they wanted to do more volume of small single family stuff. And so we just sort of divided our interests there. And so I focused more on the development side. So one of the bigger projects that I finished in 2022, we built an 82-unit multifamily ground-up construction, like 4-story building. So that turned out fantastic. Built it in 14 months from breaking ground to certificate of occupancy. And so that was a lot of fun project. And so I got another one that we're working right now. It's a 300-unit multifamily ground-up construction. I've been working on that for several years with all the paperwork. It's been a long time. And I'm negotiating an investor deal right now with it that will bring in the money we need to fund the project and build it all the way vertical, which is exciting.
Yeah, very cool. Those are some big steps. What are some of the key differences or lessons that you've learned in that transition?
As you grow, there's always new things. And so, which is what I love. It's there's always a challenge. I don't want to get bored or be complacent.
Got it. Is there different team members that you've had to bring on as you start getting into ground up construction and those things that maybe you didn't think about?
Oh, so part of why my focus has been bringing on the right partners, absolutely 100%, the right people. And so I've got a great general construction partner on that project that is very good with the development side as well. Sometimes general contractors are really good at just building. But if you look at a ground up construction project, there's the hard costs, which is what the general contractor does, and there's a lot of soft costs. And so sometimes general contractors don't understand all the soft costs that are associated with the project. And this partner developer does know those very well. So that's really nice working with someone who's very detail oriented in all of that aspect of it.
I like that you've done a lot of different types of projects. Do you have a favorite, asset type, or is there something where it's like, oh yeah, we got another multifamily coming, or is it all the same to you? How do you feel about that?
I guess primarily I look at it as I work to grow different people's businesses with them, in a collaborative kind of a way. And so it's meeting people at where they're ready right now. So I've got that one couple I was telling you about. So far we have 2 properties with them, a 9-unit and a 13-unit property, and they're looking to buy something else again. And so we'll support them on that next phase of it. And then my brother that's doing the self-storage, that's been fun over the years. And so he's ready to grow more. So we've got some big targets, in the future here. So we're acquiring another property.
And what do you look for in somebody that you're going to partner with and start working collaboratively with?
That they have experience. I remember there was one class I was at, and they said, "Have you ever lost money in real estate?" And if you hadn't lost money in real estate, they said you couldn't be into the next club or the next level of it, which made a lot of sense. At first I thought it was silly or something, but it just shows you've been seasoned around and said, okay, you've had the hard times, the tough times. How do you handle those? And do you run and hide, or do you say, okay, let's dig in and figure it out?
Yeah, I think that's the times where I've seen people kind of lose the most respect is during those hard times if they don't communicate. And the interesting thing is oftentimes just the communication alone is what makes the difference in whether that person is going to be trusted to go into the next deal. How do they handle the communication of it? And are they willing to ask for help from the right people?
Yeah, we had a project. It was a 26-unit multifamily. It started out as a loan on the property. The loan didn't perform. And so we took the property over and thought it would be a good long-term investment. It was a tough property for the short story of it, but had a fire in it shortly after we just did a whole remodel. So we'd taken about 12 months to do a full thorough remodel on it. And then it was operated or occupied for maybe 6 or 8 months. And then we had a fire in it. And so it was just slow. That was just a tough project. It never came to a real great point. So we put it back together again and sold it. But it was like a 5-year period and that we had the property, and I think it was rented out for 8 months or something. So that was more of a disappointment on it than a win per se, but communicated with my investor partners on it the whole time, and we just worked through it. So everyone got their money back, and the deal got done, and what needed to happen did.
What are some of the things that you think having more liquidity for the passive investor will do for the marketplace?
Oh my goodness. So part of it is just your sense of mind, right? So investors oftentimes, they say, I would rather put my money in the stock market or something because they know they can sell it in any moment and they can have that liquidity. Most investors that I work with, they don't need as much liquidity as they have, but they like to know that they have the ability to access it. And so that most of it, I think, is going to be primarily just a peace of mind. Then there's other investors I work with, though, that they want to help a child buy a house, or they want to do something else sort of big, or and so maybe 2 or 3 years previous they weren't necessarily thinking that kind of goal. So as life changes and life situations change and opportunities change, being able to have access to that much quicker and easier is wonderful.
Yeah, many of the very experienced operators that we talk to, they say that 7 out of the 10 people that want to invest with them don't, simply because of the lack of liquidity. And like you said, it's not necessarily that they think they're going to need that right away, but they want to be able to have it. It's kind of that peace of mind thing, and knowing that life changes so quickly sometimes, and you want to make sure that you have access to that capital. And that's why people will go into investments that are earning them maybe 5 or 6%, because they know they can get access to that money quickly. And I think a lot of big passive investors, especially, they reserve a certain amount to be in the most liquid place possible. And so yeah, that's a big thing that we're pushing towards.
Yeah, that was one of the most exciting things when I was talking to Mike on your team, was just understanding his vision for that. And I immediately got excited, when he shared his vision of what it can be. And there's not a lot of secondary market right now for syndication investors. It's they're stuck sort of waiting until the next opportunity or the next liquidity event, whether it's a refinance or sale or whatever, and they don't have a lot of control options to make a difference in that. So having a listing hub where gives them a lot more freedom, I think is wonderful.
Yeah, and I love that that's how you connected with us, is you got to talk to the man at the top, the guy with the vision, our CEO, Mike Anderson, on your very first phone call. I would love for you to share, what do you understand about pre-iShare? And then let's see if maybe we can fill in any gaps that you may not understand yet.
Yeah, I'm sure there's plenty of things that I don't understand, but I'm super excited to learn and be able to share it with my investors. I've been asked a lot of questions already in regards to it. So what I understand is it's a listing hub. It allows investors to place their investment on there if they want to sell and get some liquidity from it. But that's the high level that I know, really. So yeah, I'd love to hear more on sort of the mechanics of it, maybe the economics of it. When I was in the fund world, we would have investors, like big Wall Street kind of investors, that say they would buy our portfolio of lit notes, but they would give us like 80 cents on the dollar or something. And I was like, well, that doesn't help me do anything to recycle my capital. It just makes me go backwards. So yeah, I also wanted to understand what that looks like. For investors.
And the big part about that is we wanted to create a true open marketplace so people could figure out, based on anybody who can, anybody from the public that is an accredited investor that comes to that site, what is the true value of their investment? And I think it's going to take some time, obviously, with some bid ask back and forth. And it really comes down to that person that is selling their shares. Why are they selling? And what do they feel like they could command from it, right? I think there's going to be some really savvy investors that use this to get in with good value add operators in early stage and capture some of that value in the early years and then sell on the listing hub once it has stabilized income, because there's many investors out there that will pay more and therefore take a lower return if they can see proof that the income has been coming in, right? In fact, that's a big part of our fund model itself is, we want to see what that cash flow looks like as we're making a lot of our first purchases to make sure that we can provide a stable income to our passive investors. But there's also very patient money in there that will probably be more strategic, that is going to be buying on the listing hub. And they're going to be looking at this and saying, where are the opportunities that I can, jump in and get the most upside by stepping into a project later stage. So I think there's some things that are going to be figured out throughout this process. I could see great operating deals where somebody is selling, that they'll be able to realize some of that upside and leave some skin on the bone, so to speak, for that next investor.
Yeah, I think there's a lot of investors that have a different appetite for investing. Some investors, they really want cash flow. Some investors really want the highest return on their money. Some investors really want to look at the past performance of it. Some investors are okay trying something new. So everyone's got a little bit different, what they're comfortable with and what their goals are. And your listing site looks like it will provide good options and solutions for a variety of different investor types with the strategies in there.
Yeah, and I think that speeds up the market. Not only does it speed up the market, but potentially also lowers the cost of equity for those operators out there.
I've talked to so many people who say, well, okay, candid question, if I don't want this anymore, why does somebody else want this? But like you said, there's patient investors, there's people that have a different criteria, there's people that want a longer hold. And just not having to be tied to your fellow LP investors if you need to get out is really going to shake things up, I think. And we want to work with you to even educate your investors, empower investing in terms of, look, there is a tool, there is a process here, and we'll work with you to roll that out.
Fantastic.
Chris, many times what we have when we're talking to a passive investor that's wanting to sell, it comes down to a life situation, one thing or another. You talked about, helping the kids buy a house or putting the kids through college or some of those things. But oftentimes there's a bit of this principle where they're like, I committed to this for the long term. I don't know what my sponsor is going to think of me. How do you think that you would react if somebody came to you and said, listen, I'm in a spot where I need to, I need to liquidate, and here's the reason why. Do you ever see yourself pushing back if there's a third-party source that they can go to?
First of all, I always try to accomplish their goals regardless. So if they have their goals have changed, I don't really want to have somebody in my deal that doesn't want to be in my deal. So I've always worked to accomplish that. But golly, that's a lot of work when you're in the middle of a deal and you're saying, okay, I'm trying to raise money on this other deal over here, and I didn't know you wanted money on this one right now, and I'm trying to work on this. My Rolodex is only so big, So having this other third-party option, it just helps all of us and say, hey, great, yes, go for liquidity over there. You can still access your cash and do meet your goals that you wanted to do.
Doesn't that give you peace of mind as a sponsor that you go, okay, this investor that needed to get out of my deal, too bad they wanted to get out, but they're happy and they may come back in the future. And then you have a brand new investor that buys that share, you're taken out of it, and it's a win-win for everybody, and you have a new investor.
Absolutely. And
It doesn't hurt anybody's feelings.
Right. No one's feelings are hurt. And it's just like a breath of fresh air and relief for all of us, for both the sponsor and the investor going, sweet.
We do hear that all the time. What's my sponsor going to say? What do I have to, literally, give me the words. What do I have to say to them? How do I address this? And I think they forget, look, the sponsor's human. They want you happy. They don't want to have to problem solve. So
one thing that Mike talks about a lot is when they did the math of all the different things they did, and they was back in the day before all the Reg D stuff was out, and so they had to put together these buying tours and meet people and talk, build a relationship before they could ever do business with them. And he said for him, it was over $3,000 per person per investor before that person would actually invest with them. Do you have any of those costs on your end of how much you invest in, wining and dining and getting to know people before they turn into a passive investor with you?
I'm going to say my costs are much lower than Mike's, but probably my volume is also different than what his was. When I was talking to him, he said he had several hundred investors that he was working with at the time. So my pool is much smaller than that. And primarily my new investor acquisition has been word of mouth and referral. And so that I don't have the same kind of data or statistics on that. But we're looking through a handful of other avenues to grow recently right now.
Yeah, and it definitely changes with scaling. And obviously Mike built a multi-billion-dollar business as far as assets under management there. And so, they had to be actively finding investors constantly for that next deal. Sounds like you're starting to scale to that point. What are some of the strategies you're thinking about using to start scaling your investor base?
We've got some different social media campaigns that we're working with. My brother that does the self-storage, he is on TikTok and has 450,000 followers on there. So he's got a network of people that like to hear about self-storage properties. That's what he talks about on there. So lean into that and showing people there's an opportunity for them to invest alongside with him on those projects. Then working with other networking groups that we can connect with, and then building out our investor relations team so that people can interview and I can have my time freed up and have the interaction and one-on-one touch.
Tell me about your team right now. How big is it?
There's probably 8 or 10 of us all together in different pieces and parts that are working together.
Yeah.
Yeah.
Very cool.
Question. Most of our viewership are smaller time investors, but we run into so many that say, I want to start syndicating. I want to be a sponsor. I want to start putting these together. What have been some of your biggest takeaways from what you've done, and what advice would you give to somebody who said, this is what I wanted. I want to do what you do?
My advice on that, let's say probably number one would be start small, get something where you're comfortable, get some experience in real estate and management. And the next one is getting the right people on your team. Having the wrong people on your team early on, it's going to make you spin a lot of wheels. So getting people that have a lot more experience than you around you is wonderful when you could do that, and then learn.
What team members do you need? Let's say I know nothing. Do you need an accountant? You need a property manager? Who do you need to build this type of team?
Okay, yeah. So it depends what skill sets you bring to the table yourself as well, right? So but if you're just saying I want to put it all together and I just want to be the person that organizes and puts it together, then yeah, you need a property manager, someone who's going to operate and make sure you hit their projection numbers. Someone's got to be good at putting projections together and doing some analytics on deals before you acquire them. And so that can be an accountant, or it can be someone who's good with the spreadsheet, but it needs to be somebody who understands all the costs and pieces that are associated with the project. Definitely a good accounting team is hugely important. Make sure you have all of your data there. You got to have a good attorney that understands the right way to write deals up to make sure you're doing them legally compliant. So the core basis to get started. Yeah, really. And then how big do you want to grow, and what back end people do you want to have so that investors are serviced properly and things are getting done in a timely basis.
And now one of the things that I always like to focus on, because I don't think it's widely talked about enough, is the only true passive investing out there is finding a good operator in investing in their deals, right? Because if you're going to buy a 13plex or whatever it is, you're going to be an operator in some sense, even if you hire out all the management, right? It really comes down to being a passive investor. I'd love for you to hit on some of the benefits that your passive investors get by simply investing with you guys and letting you do the operations.
One of my friends or partners, he says, you have to manage your managers, and he always complains about a property that he has and him having to manage the managers and directing them like what to do, and we need to do rent increases and coaching them on a constant basis to get the results that he wants to receive from it. So when you're more of a passive investor, you can sit back and you're going to look at the projections ahead of time and make sure that that's what you want to achieve with your money. But then from there, going forward, it should be your money going to work and getting distributions and the financial reports, and that should be it. I mean, it should be pretty simple, which is really nice.
And that's one of the things that we find is many passive investors got there simply because they had something else taking up the majority of their time. Mm-hmm. So I'd love for you to share a little bit of maybe the demographics that you've seen out there of the people who end up being passive investors in real estate.
So a lot of people that I work with that are passive investors with me are people that have invested in real estate or been actively involved in real estate in their careers. That's who I've attracted primarily. So for example, one investor I worked with, he was flipping a house. Maybe he would do 1 or 2 a year. He worked a full-time job and just wanted to keep his money to work. And once him and I sat down and showed numbers of here's what I could do for you, he realized he took a slight pay cut on what he was making versus flipping houses, but he made most of that money and he had all of his free time back. He had his weekends, his nights. So his wife was very happy. She gets to see him more often and he could live the life that he wanted to live. So from his perspective and talking to him, now that it's been years later, he's like, it just opened up so much freedom to him, and the nominal difference in money that he was making by working his butt off versus not was minimal as far as value in his life versus the amount of time that he had available.
And you hear that so often because people know they need to invest in real estate. So they think, well, I'm just going to find a cheap house and fix it up and either rent it out or turn around and sell it. And, we've had people that have actually shared with us, they were so mad that they didn't get taught about true passive investing earlier, mm-hmm. especially if they're a doctor or a lawyer or, there's somebody that they're already working 50, 60, sometimes 80 hours a week. And then they're telling their spouse, I need to invest our money and I'm going to go take more time away from the family to try to make real estate work.
Yeah, that's a challenge. I mean, it's a lot of pieces and a lot of things to learn. And then there's another investor that I work with, and he sends me deals. He likes to be involved still, but I would say 1 out of 10 of his deals make sense. And so I tell him all the time, don't buy that one. Don't buy it. Your margins are too thin. And so I think sometimes, especially somebody, a professional like a doctor or a lawyer or something that is a different professional focus, sometimes they'll look at a deal and they may not know all the factors they need to calculate into their view of the project, and so can have some different results than they're anticipating.
That makes sense. Well, is there any other advice that you would like to offer? I mean, the general public. We have everybody, watching this. Oftentimes they are newer investors, but we also have some very high-level folks, and maybe they don't know your niche. What are some things that you would offer them as far as advice on moving forward in the current economic times?
Yeah. Okay. So the current economic times, everyone has this, sometimes they want to put a narrative on things. And I say, when the numbers make sense, it doesn't really matter what's part of the market cycle we're in, if we're in the up or the down, especially when you're dealing with cash flow real estate, because you're looking at it from more of a longer term perspective. And it's not necessarily the same kind of perspective as a homeowner of is now the right time to buy or the right time to sell, because those markets can be a little bit more volatile. But I think the biggest advice I would give somebody is set your goals. What are your goals? What are your targets? Is your target you want to make $5,000 a month passive income? Do you want to make $10,000? Whatever your number it is, everyone's got an idea in their head, and then stay focused on it, and find ways to achieve that. And I think that's the biggest goal that advice I can give to people when they're starting to think about passive investing.
So it kind of sounds like you're saying, as long as the math works, you can go after your goals.
That's how I view the world. Yeah, absolutely.
And if the math works right now, the chance that it's going to work in the future, near future, is pretty great. So if somebody has no idea how to analyze or where to start, or even at looking at your deal, do you give advice to people on that? Are there tools you like to tell people to use, or do you just stay out of that?
Okay, so now you're asking me a question that I have my attorney over here is on my shoulder saying, "What can you say on this answer here?" So as far as giving advice, that's a different. I'm going to avoid that question there. Okay. But sitting down with somebody and saying, what are your goals, and giving them ideas and some initial things to think about and to consider is something that we'll do, and have a conversation with them on what do you want to accomplish with this, and then give some different options that we provide that could help maybe accomplish some of those goals. And then ultimately they got to make the decision of what they want to do with their money and what they feel is best and feel good about.
And they'll talk to their own professionals and financial.
Right.
Yeah. Very cool.
Tell us about if somebody wanted to know, how do I figure this all out? What are the tools out there?
Yeah, so there's a lot of tools out there available. One tool that we've put out is called the Dividend Streams Guideline. It's geared towards investors that would like to have passive income. And
the dividend stream, what is it?
Dividend Streams.
Plural?
Yeah, dividendstreams.net. Yes.
Okay.
And so it's a guidebook. It's about 12 pages. It's an easy read, but it gives a handful of ideas and points to think about and consider as you're coming up with a plan of what you want to accomplish.
So many people don't know. I can't wait to read it. That's cool.
Yeah.
Good for you. Have any of your investors come to you and tried to compare, are you doing this on your own?
They call me out here a little bit. Yes, I appreciate the accountability, but I get from investors, it's always welcomed.
Yeah, very cool. Well, Chris, it's been great having you on. It's going to be fun to work with you over the next few years. I know that hopefully we'll see, some of your listings on the Listing Hub as well. And I think we're even going to help you in marketing some of your upcoming deals. And we look forward to doing that. I love what you're doing, and it's been great to have you on.
Awesome. Thank you for having me.
Thanks for tuning into this episode. If you are a passive investor and you're wondering where you can go to find great opportunities, head over to iShares website and look at our Listing Hub. Not only can you find fractional shares of existing real estate syndications, you can also find some of our approved sponsors and current offerings that they may have. Plus, we have the iShare Fund, which is a very diversified way to be invested in all kinds of different asset classes, sponsors, and geographies.